We'll try it again. This time we'll try it with people listening.
I'm coming at you with the Spanish version. Poo poo, poo poo, poo poo.
Wouldn't it be el pu, el pu, el pu,
el poo, el poo, el poo?
So, as you guys can see, we have Jerry with us today, Jerry V. Hall, and we're going to talk about crypto and common sense and all sorts of other stuff. Let's see, who do we got? Oh, this is easy. JSP, Scorpzion, Gordon Bennett over on Theta. On the YouTube, we've got Belinda. Let's see. Belinda, hello. Jim, what's going on? Scorpzion, Ella Paul, Florida Dan in the house. Demayan, Jared, what up? Nicole, what's going on? And of course, Joe, ¿qué onda, Joe? Audrey, not Aubrey, Audrey, and Bitcoin Candy. Okay, so let's go. Oh, Stress Relief, Nara, Tim. Okay, now they're starting to come in. See, it took that reset to get it going. It just took the reset. Tim and other Tim. There's not one Tim better than the other. You didn't capitalize your name, so I think Tim H is winning over Tim K just because of the capital letter. Although that could mean that he's like trying to big it up and you're just going with the lowercase because you're more chill, which then that gives you points. I don't know. It's tough to score. Krabby, what's going on? Okay, Jerry, what's going on in your world, man?
Oh, well, I'll tell you, we just here in Costa Rica had the presidential elections yesterday. Interesting fact, Costa Rica votes on Sundays.
Oh.
They do not take time out of the work week. It's a scheduled weekend event. And we've got a progressive now as the new president who is not yet a Bitcoiner, but is Bitcoin friendly.
So so they're open to like what, paying debts and settling stuff in crypto,
No, I think they're open to the innovation and the job creation that comes with new industry.
So what do you think? What is life in Costa Rica like, Jerry?
Well,
okay,
nowadays,
wait. Are there still dinosaurs?
No.
From Jurassic Park that escaped. The ones that escaped. I'm talking about the raptors that escaped. I'm just saying, have they taken care of those yet?
Those are taken care of. Costa Rica is human friendly again. Costa Rica is wonderful, man. The minute I took off the regulator or the governor on my wallet and started spending some money, my quality of life went up exponentially.
Funny how life is like that, huh? The minute the faucet opens up on the cash, life gets a little better.
I'm in a new place. I'm a mile and a half away from the property that I'm building my dream home on, and I just love it. I'm up in the hills. It's very cool and nice and wonderful, and the people are wonderful. And the lady that I buy my eggs from is my next door neighbor, and the guy who I get my meat from, I walk to his farm and buy fresh cuts of organic beef right from the source. I mean, it's phenomenal up here.
How big are the spiders?
Some of them as big as my head. No, we do have spiders. I mean, you have insects and you have bugs, but you also have a lot of birds that eat the insects. So insects are not a big problem here because we have such a flourishing bird population.
The birds.
It's wonderful. So to answer a long-winded way of saying how's life in Costa Rica, it's really friggin' good.
Because of the birds. Okay, we'll run our non-sponsored opening, and then we will get back to the fun stuff. We're going to talk about markets. We're going to talk about potential market manipulation in the Waves token, and what that might look like, what that kind of could signal for other stable coins. Because I think people need to make sure that their stable coins are actually stable and not pegged to whimsy and snake dust. And then I think we will talk a little bit about Looks token. We probably will talk a little bit about Ferocious did the paint sale yesterday. Everybody's like, what the smoke? Well, they're in, I don't know exactly how much they've raised, but I know that they're somewhere between 15 and 25 million that they've raised in this sale. They're creating a metaverse based on ferocious art, and their currency is paint. And yesterday they allowed you to buy paint. And some people spent a lot of money on paint. There was some people that spent many hundreds of thousands of dollars on paint so that at some point in the future, in the FUO world, they could go in and, well, we don't exactly know yet, but colorful, artsy stuff. But he's one of my favorite artists. So, of course, I FUO'd into it. So anyway, we'll talk about that a little bit. And anyway, we'll do all of that when we get back from these nonsensical messages. Pick a good opening, a proper opening for today. All right, Big Jer, why don't we do this? Why don't we go through markets and you tell me if there's anything that excites you.
Okay.
Bitcoin is down a little bit. Anything interesting there? It's not really, it's been kind of quiet. What's going on?
There's well, I mean, if you've noticed what I've noticed over the last month and a half, there's been a kind of a nice steady melt up. I'll take that every day.
Yeah.
It doesn't need to explode by 30, 40% a week for me to be encouraged.
Let me ask you this, Jerry. How long do you think it is before people start talking about the next halving? So we had one in 2020, 2024, we'll have a halving. Typically, people start to kind of pre-price it about a year out. So you think we wait till next year before people start the halving talk?
The talk, yes. There's too many other juicy things in news cycles to spend our time talking about. But that's the real deal, right? How can we wrap our mind around the reduction of the inflation rate of the asset with the adoption rate of the network? And what will that really mean? I don't know, but to me, it screams higher prices in a nutshell. What do you think?
I think if demand is constant,
right?
I just don't see anything taking Bitcoin's place for what Bitcoin is. Ethereum has become kind of a weird currency, but it's a currency that you light on fire through transactions. Now, if in June they can upgrade, they can go to proof of stake, they can do all of these fanciful things, which I'm not so sure. And I would urge everyone to probably lower your expectations for that, or at least prepare for some time setbacks, because I don't think they get there, and I don't want them to rush getting there either, right? Like, I'd rather them get this right than rush.
I would love to know, look, Nick, let me chime in. Why do you think that is?
Like, why they won't hit their software upgrade kind of milestones?
Right. I think you and I think the same outcome, but for completely different reasons. I'd love to hear why you believe they will delay proof of stake.
I think it's the basic rules in technology and software, in that you always over assume what you can do in the next year, and then you under promise what you end up accomplishing in the next 3 to 5 years, because technology builds on technology builds on technology. So there's this kind of logarithmic growth where you get more output a year from now than you do in the year leading up to a year from now, because you're standing on the back of all the iterative things you did this year, right? And so that's kind of like with AI, this iterative approach towards general intelligence. It gets easier and easier as the months go by, because everything you do today makes tomorrow easier.
That's an interesting take. I have a different one, and it's maybe a little more sinister. I believe there are players who are encouraging the Ethereum developers to not transition to proof of stake right away. It has nothing to do with what you talked about. It has everything to do with regulatory classification. Should they go to proof of stake, they are for sure going to be landing in what the SEC's crosshairs for a security.
Wait, why is that? I'm not sure why that is exactly, because Well, I'll
Well,
tell you two reasons. One, just real quick, my take is that the SEC kind of gave them a pass already. Now, I know it's not legal, but they did say they would not be prosecuting Ethereum because they said, yes, Ethereum launched as a security, but that kind of ship has sailed. They are no longer because they're sufficiently decentralized. I don't know what going to proof of stake, how that changes the centralization issue.
it
I'm not
doesn't
sure.
change the centralization issue, but it does absolutely 100% change the classification as a security. The SEC has been very clear. All right, whether it's right or wrong is not the debate. The debate is that Gary Gensler, on numerous public correspondence, has said proof of stake to the SEC is deemed a security. They see proof of stake as a mechanism to classify something as a security.
Well, I
could be completely wrong, but that's just what I'm.
No, and that may be what they're signaling, but I would, where my pushback would be, all of the layer ones other than Ethereum are basically proof of stake, except for that proof of catastrophe that is Solana. So, so then that would be making all of these asset securities, and at the very least, Coinbase would delist everything because they're the biggest snitch in the batch, and they would absolutely bend the knee at the first sign of anything. If Gary Gensler sniffled security towards Brian Armstrong, he would shut the whole platform down. So my guess is they may be doing that maybe to scare new companies from launching stupid products. But okay. I think, well, we'll wait to see. But they're not, you know what? They're not going after any proof of stake protocols. Look, they didn't go after the guys at Solana that took $200 million worth of tokens and put them in their back pocket and got caught, and they're not going after them. It's like, who are they going to go after?
Okay. I hope that my take is wrong, because I hold a lot of those assets.
Yeah. I mean, I just don't think just being proof of stake. I think there are versions of proof of stake. For instance, the EOS version, and you could maybe argue the XRPL version where you have like a few dozen validators and they're all your buddies. There's an argument that that's not really decentralized. And if you wipe away the decentralization and you look at who holds the tokens, then something can look a lot like you're selling a security to the unknowing publics. I could definitely see that argument where you have like the what is it, federated proof of stake and things like that. But I think you find decentralization easier in proof of stake. Who knows? Maybe Gary's is a closet Bitcoiner, like a Bitcoin maxi, and we just don't know it. I don't know. So you may be right, but at least so far they haven't taken anybody out. So I think when Ethereum transitions over, now I could take your side of the argument and say, for different reason, they might be getting pushback from the miners that have invested tons and tons of money into these mining machines and huge infrastructure. And then, of course, Vitalik pays them lip address. He's like, oh, no, don't worry. Of the 64 shards, one of them will be proof of work. They're like, F you, dude, you big-headed rube. Like, get off your couch, man. So I don't know. That won't be enough because he's rich now. And once someone's rich, you can't appeal to them financially. So I think they try to upgrade. I think they probably delay it because they've been delaying it for 5 years. So I don't see June being any different. They just keep kind of moving the goalpost. Because what I don't want is they rush something out the door. And, crypto's not easy. And so if they rush something and it's gross and there's something that can be kind of exploited, as we know, everybody will come in and exploit as quick as possible. And then you could get all sorts of madness. There's also the chance that when they do this, that it creates its own another Ethereum token. Because maybe the people that the miners are just like, no, we're not allocating our tokens, because remember the miners hold a lot of tokens. So they'd have to take the majority of those tokens and push them off. I don't know. I think people will be breaking down the details of what that's going to look like, because if the tokens don't go over and stake in the Ethereum contract, or start staking, you have to have 32 or stake through Kraken or whatever. If the tokens don't come, then you effectively have a new coin. And then they have what do they call it? they have some bomb, some time bomb, some thing that they call it that's going to be left on the original chain to basically nuke. I don't to force people off. So we'll see.
The programmatic kill switch that goes into effect at X amount of blocks after the conversion.
We'll see. And people are gonna dive into this much deeper than we are. Arthur Hayes, the BitMEX guy that's basically flirting with prison, he came out with this article. It was last night. And first of all, he's not a dumb guy. He's just an absolute crook. But he's not a dummy. He's pretty sharp. But he came out with this whole article that he thinks that the next bond is going to be Ethereum's going to be looked at as a bond. And so he wants people to try to go and convince fiduciaries that the new bond market is Ethereum. And so you would do a carry trade where you would basically buy Ethereum, stake it, sell a futures contract against it, and then just collect the spread. And matter of fact, you could even borrow, buy, sell a contract, catch the spread, and you get like 690 basis points, so 7%, which is higher than the best paying thing on the entire safe liquid asset curve of from a few days all the way to 30-year, right? So that's him. He's like, this is going to happen. And I'm like, oh man, I'll tell you what. You worry about carving knives out of toothbrushes and igloos out of soap and giving prison tattoos. That's what you focus on, Mr. Hayes, and let the rest of us worry about currency units. So who knows? We'll see. What are your thoughts if everything goes smooth post transition? What does the world look like this summer? If Ethereum does go to proof of stake, is that pro Ethereum or is that actually pro all of the other proof of stake? And then you start comparing Ethereum to all the other layer ones that may be a lot more elegant than Ethereum.
I think it will definitely draw a tremendous amount of attention to what proof of stake is, which I believe has all kinds of downstream or knock-on effects for the others like Near and Avalanche and Cardano and blah, blah, blah. I mean, it just, Atom, one of my favorite ecosystems, the downstream or knock-on is going to be huge because there's a whole bunch of the world, Nick, that is kind of feel like they have an understanding of Bitcoin and are now taking a larger perspective of these digital asset space beyond Bitcoin, which obviously Ethereum is the first on that list of things to kind of dive into and look and understand. So if people can get and understand proof of stake, it opens the door for a lot of these other things, Near and Cardano and etc.
Near was on a tear yesterday. I don't know for those of you that saw it. Near got up to, it was in the mid 17s. So everything's taken a little bit of a beating today, except for Cardano, which, if we are to believe the rumor, there's going to be an announcement about Snoop Dogg tomorrow. I know. I actually hope it is not so. I hope it was just an early April Fool's joke. The problem was it wasn't on April 1st, so I'm worried that it's not a joke. But anyway, Cardano's doing just fine today. And that whole ecosystem is flourishing. Polkadot, it started to kind of make a little bit of a retracement. Last 30 days, up 27%. It's still down 50 on the year. Where are you at on Polkadot, Jerry?
I can summarize my position on Polkadot. It's the same with every other one of these layer ones. I was up to my neck in layer ones, and for good reason. But I will tell you, I've scaled back my positions dramatically, probably reduced every position I had by 60% for one reason and one reason only. And that is, I think we're a lot farther away from having that be a real foundational element. So I decided to create yield machines that generate me yield that I can turn into Bitcoin, because that, I believe, is the bedrock foundation that's established. So I'm just going to continue to increase that. So I still own all those things that I had before. I just own 60% less of them. And I put them all in the same bucket, because the truth of the matter is, Nick, I have zero insight to who is going to create the application that reaches 1 billion people and what smart contract platform are they going to build it on? I don't know.
Yeah.
I don't know.
And the question everybody wants to know, Jerry, are you staking your gel or Arrakis spice?
That's an interesting question. I'll be honest. I have no idea what that is.
Yeah, I don't know what it is either.
I love the movie Dune. Big fan of all 3 iterations of Dune, but not in the crypto world.
Man, I did my best to stay awake in that movie. I took a bump of meth and I couldn't even stay awake. So, but the music was great. It lulled me into that sweet lullaby lulled me into no, I don't know what that is. Look, man, there's 12,000 plus tokens and you can't follow them all. And I try to reduce my thinking to core fundamental protocol layers, the things that sit just above the internet. And then occasionally I'll go a little bit further and say, okay, what's a layer 2 that helps scale a layer 1, right? And so that pushes me towards things like Matic and Harmony. And this one that I'm looking at, Scale, which I'm not sure if I should buy it yet, but I'm still kind of reading about it. And some of these other kind of layer 2s. And then that pushes me towards saying, okay, what's going to be the layer right above a layer 2 that makes development easier for people to develop the apps of the future. And so that would have me looking at things like Graph Token and stuff like that. And then I would say, okay, now we're talking about who's going to develop the apps of the future. That's going to sit. So that's 3 or 4 layers higher. And I just think it's so much trouble to guess. Those are such really tiny, minuscule, nebulous questions. And you really are speculating on top of speculation on top of speculation. So, and if you get it right, that's awesome. But it looks a lot more, that looks a lot more like gambling at that point. And I think if you did your 5 Ts, right, you would not maybe be as excited about most of those smaller projects, because if you think about it, where are the kind of gunslinging devs at? They're already linked up, partnered up in protocols. They're at the protocol layer. The big brains are building protocols. The gamblers and entrepreneurs are building other stuff. And some of those will get through the cracks. Like, I don't think anybody probably thought TikTok was very exciting a few years ago. And now it's, people are glitching on TikTok. So that's good. But it's very tough to guess what random app. Whereas if you own the protocol, you win anyway. If anybody on Ethereum builds the next major thing, you win. If anybody builds on Cardano, Polkadot, Near, to an extent, Matic is becoming a layer 1. Cosmos especially has a lot of stuff. Jerry can probably talk to that. Matter of fact, let's talk to that a second. Jerry, what is kind of pulled you into Cosmos so much?
Well, I'll tell you. So it was Nick Black. I blame it on Nick Black. So as a result of buying Fetch AI, and when Fetch AI did their migration from an ERC20 token to the Tendermint, basically the Cosmos ecosystem, we had to get a new wallet, right? We had to get a new wallet that would allow us to interact and stake and redelegate new rewards, called Cosmos Station. So I got that wallet. And when I downloaded that wallet, Nick, I saw all these other assets available in that wallet. And I went, And one day on Kraken, I saw an asset that was in my Cosmos Station wallet that Kraken was offering 23% interest on. And I went, let me check that out. It's called Kava. I come to find if I staked it myself, I could get 33%. So the entire yield hungry investor that I am, it took me into a place where I found a lot of other projects that were offering incredible yields, 50, 60, 70, 80, 100, 150% staking reward yields. And then I started thinking, if I could take an asset that may be semi-illiquid, that's not even available on an exchange like Coinbase or Kraken or Uphold anywhere, but I can turn it into something that those other exchanges have, then maybe I can arbitrage yield for an asset like Bitcoin. And so that's what I'm doing now. It's the best thing in the world. And I've just dove into understanding what's going on with those things. So that's my Cosmos story. but it's all because of you, sir.
Well, gosh, yeah, you're doing pretty well with it. So I haven't, I didn't dig that deep into Cosmos other than the fact that I really like it. I know that they were having kind of, well, for instance, Fetch. They were having all these cool tokens that you could get by staking Fetch. You got all these cool ones. And then it seemed like Mobix was the last one. And that token's stupid and makes no sense. And they're going to do a second airdrop of Mobix, a useless token that makes no sense. And they haven't really done anything since. So Fetch has gotten a little quiet on the kind of release of AI-based asset type stuff. Whereas then you have tons and tons of stuff going on over in the AGI world, which I'm kind of excited about. Some other stuff that I was looking at, audio is having a heck of a run recently. And I was looking, and if anybody found any news, let me know. I was looking for news, Audius and the token audio over the last, 5 to 7 days. Well, let's look at it. It's done pretty good. It's up 100% on the month, 35% of it last week, 10% of it today. So I don't know what's going on with audio. I was looking for news. They, just so you know, to continue the TikTok reference, audio linked up. They've got some kind of partnership with TikTok where TikTok talkers, whatever, they can take music from audio and they can kind of stream it in their videos and do all sorts of cool stuff. I don't know that it adds any currency units to audio, but it makes sense that decentralized, platform for music is probably better. You have Spotify, which is cool. And that certainly gets music out there for a low cost, but also the people making music, they don't get paid anything. And so that's not a super great, they don't look at audio and go, cool, we're going to get paid. At least not so far. So anyway, I am curious to see what that thing does. I still own a pretty good chunk of it because the staking is so good. I pulled my original investment many, many moons ago. So I'm good there. Is there anything non-AI, Jerry, that you're kind of looking at right now that you're interested in?
Non-AI. It's just basically been the yield. And I'll tell you, it's real simple for me. My entire portfolio of 40 assets, every asset generates more of itself in some way, shape, or form, whether it be into its own platform wallet or a third party like a Nexo or Celsius or BlockFi or what have you. So my dollar cost averaging is covered, right? I'm going to continue to acquire more audio and more AGIX and more NewNet and more everything just by staking my tokens. But I think for me, all new money, Nick, is going into Bitcoin. I'm just stacking Bitcoin. I don't have enough Bitcoin. There is not enough. So that's my whole deal. And it's because my overall thesis is I'm going to borrow against Bitcoin to finance my life. I can't borrow against AGIX. I can't borrow against 90% of my portfolio. It just, nobody will loan me money against it. But I can't, I could swing a dead cat and hit 15 guys that'll loan me money against my Bitcoin.
Well, and especially for me, especially is not the right word. If I look at the performance of Bitcoin, if I was going to be borrowing against Bitcoin, which I would not, I probably wouldn't do it here, me personally. I think we talked about this yesterday. Jerry and I were talking about Michael Saylor, and I think that's incredibly, incredibly risky to borrow against Bitcoin to buy more Bitcoin because we've seen that not work. As an individual, you can do whatever you want, but when you are a fiduciary for people for public interest, I don't think the rules should be the same. But if I was going to do it, I would have been doing it around $30,000 Bitcoin or $35,000 Bitcoin, because to me that feels like the bottom of the bottom. 45, I'm not sure. We could as easily be at 90K by summer as right down back to 30 again. And once you start taking on leverage on volatile assets, it multiplies the volatility against the volatility, right? So if something was a volatility of 2 and you borrow against it to buy more of that asset, it's not a volatility of 3, it's a volatility of 4. It's the square. And if you do it again, it's a volatility of 16. It's magnitudes. And so I'm I'm not, a big fan of that. However, for what you're talking about is a little bit different. You would say, I'll borrow against Bitcoin, take some cash, some stable coin against that, and use that to actually finance my lifestyle. Is that what I'm understanding?
Actually, well, it's a slightly more nuanced, but not much. So everything you said is correct. I'm taking Bitcoin. I'm going to borrow cash against Bitcoin. I'm going to put it into a hard asset called real estate, my home. Beyond Moon Farms, and for those of you inclined in the Españoles, Más allá de la luna, is going to be a profit center. So yes, I'm going to live there, but I'm also going to Airbnb it. It's a business, right? Beyond Moon Farms is a corporation whose sole purpose is to protect me and put me in the best financial situation as it pertains to paying taxes for the rest of my life. So I need to produce product or services that I can write off costs against. So the idea is buy Bitcoin, borrow against it, have the hard asset of real estate that I, again, can borrow against later, should I choose to. But the volatility of real estate is nowhere. I mean, it's a completely different universe than Bitcoin.
Now, Jerry, if I wanted to buy one of your kind of compound, if I wanted to buy a cool futuristic house like you've got, and then Airbnb it out while I'm not there, are you going to do something like that? Are you going to let people do that?
Yes. My son Dylan will be running the management team. So you're not the only person that has brought that up. There's 5 people that want to do exactly that thing, but they also want it to be available for them. And one of the things we're talking about, Nick, and one of the things that's interesting about your endeavor with the Sticks NFTs, which I love, by the way, is having this Airbnb compound, all the various homes have their own NFT tokens that represent actual days on the calendar. So you can go to a marketplace that we'll create, and you can go actually get the token for Nick Black's cabin on January 2nd through the 10th, if that's what you want, if those tokens are available.
That's cool. You could also
you could pay with crypto.
Could there be a timeshare version where you get those same days every year, but then then the other days there's a new NFT spun up for every single day of the year moving forward?
The beautiful thing about a smart contract is that we can program it to do whatever the hell we want.
What are you going to run it on the back of?
I don't know. Let's put it out to bid and see who wants to host it. Will it be Avalanche? Will it be something in the Cosmos ecosystem? Will it be Solano?
Probably not.
Bankman-Fried, we're accepting bids. Just putting it out there.
That guy's too busy being a pawn for some government. All right.
But you get the idea. It's a way to, you taught me this, as a matter of fact. I want to give you some credit for this. If you're not monetizing what you're doing, then it's a depreciation. It's you're losing ground. You are spending money with no return. Yeah. So I got to monetize everything. If I could figure out how to monetize my breath, I would do it and earn a yield on it.
Yeah, I like the idea. I mean, everybody should simplify in their life, and they should look at everything that they surround themselves with and say, is it an asset or a liability? Is it creating income, above and beyond any kind of deflationary metrics, inflationary metrics, whatever, devaluation? Beyond that, is it creating currency units, or are you putting currency units into it, or is it depreciating in value? Everything is either an asset or a liability, everything. And I think that sometimes people have those in the wrong categories. So
agreed.
Okay. Let's talk real quick about, there was an article that, was there anything else that was exciting to you other than the Looks token completely essing the bed last night?
Yes. I don't know how much you're hearing about this integration of these protocols that are allowing us to bridge ERC20 tokens into other less costly ecosystems. But I needed to know from you, and here's my question. how do I rough out the math for what my net return will be? Because I can see what the posted gross returns are, but none of this takes into account the cost factor of dealing with Ethereum.
In terms with Lux token?
Well, sure. Let's use, well, Lux is an ERC20, so
Yeah.
it's, why not?
So Lux is an interesting example. And so there's two kinds of staking, and we were talking about this earlier. So you have the traditional staking, and that looks like this, and it basically pays an APR of 61.4% for now, okay, on Lux tokens, meaning if you take 10 Lux tokens, you're gonna have an extra 6.14 tokens at the end of a year's time. Okay,
right.
minus some compounding effects. They also pay 76.38% of that worth of investment in wrapped Ethereum. Okay, so that's good. So you end up with a net of 137.79. We'll call it 137.8%.
That's actually a gross, because you haven't paid any of the fees to capture that value.
Well, this is, let's just say it this way. You're in for 20 or 30 bucks in fees. Depends on when you do it. And you're out for 20 or 30 bucks worth of fees. Again, depends on what the gas prices are. But the fees to go in and out would probably only cost you, if the gas was low during, some early hours of the day, 50 bucks.
So if that is the floor of the fees, then basically the price of admission is you cannot do something like this with $200.
It's unrealistic. Unfortunately, because of Ethereum, most things, there's kind of I think a barrier to entry of around $1,000, because you wouldn't want to be paying more than 5% in fees going in and out, right? So kind of $1,000 is the line in the sand in my mind.
I don't want to pay more than 20 basis points.
Well, you wouldn't if you're putting $100,000 in there.
Yeah, I don't have. I'm not. I see this, and that is what's kept me out of the Ethereum world.
Yeah, it's kept a lot of people.
2 years.
Yeah, you're not the only one, Jerry. You're right, and that does suck. But let me just show you what happens on the other side of it with this compounding effect. And a lot of people were like, "Hey, should I be compounding or not?" Okay, so when the token is doing well, and Ethereum is doing well, I believe you should split them. You should be doing this one, okay? Because I think, you don't know, Ethereum could have a great day and be over 4,000 again. Ethereum could continue to climb as it has over the last few months. But when there is a steep decline in the value, the price of the Lux token, I think it then makes more sense to do the compounded. What that does is it takes the wrapped Ethereum you would be getting every 30 seconds, turns it into Lux token, and deposits it in your staking for Lux tokens. In your staking.
So your principal amount of Lux increases. Therefore, every new transaction of a reward payment is based off of a larger principal amount.
Yeah, because more if Ethereum costs more and compared to Lux tokens, the Lux token drops in price like it did last night, you're getting more Lux tokens for the same amount of wrapped Ethereum. And the frequency is 1,200, as it shows here, 1,265 times a day.
So now, what this does, Nick, in essence, you continue to massively reduce your average cost per token, because you are increasing the amount of tokens you have at such an incredibly fast rate that if there is a gap of the price today and what you bought it for, you can close that gap very quickly using this particular tool. And then the strategy is, once there's a recovery or a change in that, you just toggle the switch back to the other mechanism.
You would unstake and restake. So there's two transactions.
Are those the normal Ethereum MetaMask fees that make you go, that's a whole week of food for a Costa Rican family to do one transaction on Ethereum. Yeah,
look, Ethereum's got a lot of problems. There's no doubt about it. And who knows, in the future, this will be done on others. But right now, Ethereum is the go-to NFT currency.
Okay.
And it doesn't look like that's going to change anytime soon. However, I believe, and everybody says, oh, once Ethereum 2 comes, then everybody will flood back to Ethereum. I think it's the opposite, because I think it's going to shine a huge flashlight on everybody on all the other layer ones. And then you'll be going apples to apples. You'll say, okay, let's look at clunky Ethereum 2 compared to Cardano. No. Compared to DOT. No. Compared to Cosmos. No. Algorand. No. Like Near. Nope. Matic. So then you're going to have to actually make a decision as a developer. Do I want to build on Ethereum with this clunky crap? Or do I want to build on something lean and elegant and cutting edge with a giant team, not just 4 rich guys, one of which is pulling shenanigans with JP Morgan trying to steal IP, by the way. If you guys want to look at what's going on with MetaMask and Lubin and all this, it's not so pretty. The fact that they've kind of kept this under wraps is kind of weird too, because, basically who's left at Ethereum is just Lubin and there's one other dude and Vitalik. And Lubin, that dude is a jackal. So it is what it is. Okay, did you hear about this, Jerry? There was an interesting article that I just read. Neutrino dollar breaks peg, falls to 82 cents amid Waves price manipulation accusations. Did you hear about this?
No, I didn't. And Waves isn't even in my scope of reference. What is it?
So, well, let's go through it. So the neutrino dollar, okay, why this was interesting to me is I am not very comfortable with current batch of stable coins that use non-US dollars to maintain their peg.
So you're talking about all the, what they call algorithmic stable coins.
I'm just not comfortable with that yet. Okay. Not even Cardano's version,
Right.
I'm not comfortable with any of them. And so anytime I see one of these plunges, usually a liquidity pool is pilfered or there is some manipulation. It's one or the other, usually. It's uncomfortable for me. And I think, well, I'll give you my long end of it afterwards and get your thoughts. But anyway, the neutrino dollar stablecoin issued through the Waves-backed neutrino protocol lost its US dollar peg on April 4th amid speculation that it could become insolvent in the future. Hashtag Terra Luna. USDN plunges 15% despite Waves backing. Well, that's weird. I mean, they have some crypto behind it. It should be fine, right, Jerry? Like, what could go wrong? And then that gets back to like borrowing crypto to buy crypto and like increasing vol. Okay. USDN dropped to a low of 82.2 on Monday with its market cap also dropping to 824 million, down 14% from its year-to-date high of 960 million, almost $1 billion. Interestingly, the stablecoin's plunge occurred despite neutrinos, and every one of these stablecoins, including Do Kwon and all the a-holes over it that say that Luna is the future, they all have claims of backing its peg with over-collateralized crypto assets on the other side. These things are like Social Security. They're great when people are going in. They don't work when people exit. Period. Full stop.
Well, you never want to have your foundation or the stability of whatever you're building your thing on to be something that all it takes is one element of the mechanism to unwind. And that's the problem with these things, right?
Yep.
As opposed to if you're one-to-one with U.S. Treasuries. You know what I mean? If you're backed with treasuries, then that's fine. Go do it.
Yeah, because you have to be backed by, and this is the thing, you also have to be willing, like with a treasury, it's a safe liquid asset. If you're willing to accept dollars, well, unless of course you're on the ban list, in which case you get nothing and it's no longer safe and liquid. But that's a different argument for a different day. Okay, right. So what happened with Waves was the token locked inside a smart contract is higher than the total USDN minted, also called the backing ratio. So notably, neutrino smart contract backing ratio came out to be 2.62 on Monday, according to official data, underscoring that it had adequate funds. It had adequate funds to back the dollar peg by 1-to-1. This is despite Waves' 35% plus drop in the last 5 days. Price manipulation. So Waves price dropped from its record high near $64 on March 31st to as low as $47 on April 4th. The coin started declining as its momentum indicator and relative strength index jumped above 70, an overbought area that typically triggers selling sentiment. Of course, among traders that just trade charts, and don't have any kind of fundamentals. And this is how you know a project is not fundamentally sound. When there are no fundamentals for which to trade it, and the only thing you have is charts, then you're going to fall victim to the charts.
Well, when you have to collateralize your own coin at a rate of over 1-to-1 just to acquire USDC, your stable coin ain't stable.
Well, and think about this, Jerry. When you're using a coin that you made up out of thin air to collateralize another coin you made up out of thin air, what could possibly go wrong? Right?
Yeah.
Nonetheless, the sell-off occurred as pseudonymous analysts accused Waves of artificially pumping Waves by 750% in the past 2 months by 1, collateralizing USDN to borrow USDC on the Vyers.finance lending platform. 2, using the proceeds to purchase Waves. Does any of this sound Terra Luna-ish? 3, converting the tokens to USDN. And 4, redeploy them onto the Vyers.finance pool to borrow more USDC. Michael Saylor, man, this is the same repledging, rehypothecating, daisy chain bull smoke that goes on, unfortunately, every day in repo. But this is how you can have
gold and silver, and it is what is absolutely destroyed. I mean, because gold is a wonderful asset, and it should be much higher than it is, but it's all these little mechanisms. Why don't they outlaw these little merry-go-round procedures? Because that's the problem. Exactly, rehypothecation, big problem.
So what this guy contends, this analyst, is if Waves price drops enough, Waves market cap could be less than the USDN outstanding, their fake stablecoin. This would mean that USDN is insolvent and would then completely depeg, which I'd say it's already depegged if it's at 82 cents on the dollar. If the USDN depegs is material enough, USDC short on buyers could liquidate 607 million of the 875 million outstanding loan, meaning 3/4 of the collateral, poof, gone, meaning the whole thing, guys. This will be Armageddon, as they say appropriately. Waves founder, Sasha Ivanoff. That's an interesting name. That smells Eastern European to me. He denied the allegations. He said, niet, on April 3rd, noting that one cannot move markets of more than 1 billion daily volume by borrowing a few millions. I like how he says by borrowing, you can't move $1 billion market, Jerry, by just borrowing 875 million. Wait. So you can't move a $1 market by borrowing 87 cents against it? I don't know, dog. That's a little weak for me. He further accused Alameda Research, a quantitative crypto trading firm headed by FTX's Sam Bankman-Fried Chicken, of launching a campaign fueled by a crowd of paid trolls. Now, to this, he's actually correct. And why I say this, I mean, I don't know about the allegations at Sam. However, Alameda Research has been used to weaponize suspect data coming out of their quants, and they've targeted a lot of facilities. And look, Bankman Fried Chicken, he buys marketing. He buys naming rights. He puts t-shirts on people for hundreds of millions of dollars instead of improving, I don't know, FTX exchange so that it doesn't suck, instead of improving Ledger X so there's some liquidity. I mean, there's all sorts of things he could do, but he chooses to do other things. So on this one, Sasha might not be so wrong. However, you don't borrow 87 cents against the dollar and then tell people that can't possibly be the reason there's issues. From a technical perspective, Wave holds its bullish bias above the confluence of two support levels. I don't think there's anything bullish at all if your token drops 37% in 4 days. That's not a bullish indicator to me, bro. Jerry, should we pile into Waves? It's looking like a buy.
You know what? I'm going to stick with my particular strategy of acquire more Bitcoin.
Neutrino dollar.
Because there are so, I mean, here's the honest to God truth. None of us are going to get all this right. None of us are going to get all this right. And I'll tell you what, if there was a way that I could buy 5 Waves tokens for a couple of bucks, put them in a wallet, they could accrue 15, 20% per year. And I look back in 15 years and that was a great allocation of $10 right on. And if not, no big deal, I would do it. But other than that, I don't want to mess with it. I don't want to follow. I only have so much bandwidth.
JR asks, how will it work? This is a random question, to convert AGIX on the ADA network on the, I believe it's the 16th. Nara might be able to confirm that. It's either the 16th or the 18th of April. The converter will be actually working now. I heard, and this is from Ben Gortzel's mouth, we will be able to soon actually stake AGIX, the Cardano AGIX, I guess stake it, that token, and the rewards are going to be a little bit more juicy than the Ethereum rewards.
You mean the normal Cardano rewards?
No. This will be separate. This will be staking through SingularityNet, the ADA SingularityNet token, AGIX ADA, April 18th. Oh,
we're going to get more than the 3.5% that we get when we stake the Ethereum version of AGIX.
We don't get 3. We get less than 1%.
I thought it was, okay.
For AGIX.
I know, I thought I was getting 3.5% or something like that.
Well, I don't know.
Was I not? Maybe I'll go back and look. I thought I was.
I hope, but I don't think that's what it is, because I can tell you this, on 1 million tokens, I get about 600 a month.
Oh.
On 1 million. And it'd have to be 10,000 to be 1%. And I'm not getting that.
No, you're not, sir.
So it might barely be 1% a year. So anyway, that's going to get a lot juicier. That's April 8th. Okay, thanks, Nara. That's going to be April 18th. So a lot of the projects running on SingularityNet are going to get a little boost of steroids as they port over to Cardano. And then there's a lot of things that can then happen. And the bulk of AGIX, of running these agent networks, is going to occur on Cardano. They're basically pulling away from Ethereum. And I have to believe there's going to be a mass exodus of the Ethereum token into the Cardano token. But luckily, it's not really an exodus. It's a transition. You wouldn't be selling one for the other. It's a swap. So that's cool.
Just through one of their little bridges, right?
Which is going to be awesome. Yep. And then you can actually fire off Pluto smart contracts against all that. So that's going to be pretty sweet. Interesting question, Jerry. How long can you own property in Costa Rica? Is that one of those 99 years things?
No, for infinity.
What?
It's no 99-year lease thing. It's not. We're not in Hawaii. We're not in some other.
Think about these people that are living to like 130, 140. They just lose their stuff. They're like, oh, sorry. What do you mean? Yeah, it's ours now, but I paid for it. Nope, 99-year lease, Mr. 140-year-old. If Rejuve does what they're trying to do, I'm trying to be like 250.
Costa Rica's got incredible property rights and is extremely friendly with the U.S. Well, the U.S. is kind of got their back from a military standpoint. And all Costa Rica has to do is kiss the U.S. ass in every element.
Forever.
But I'm okay with that. Yeah.
Jerry, I got to ask you, what's this new place you're in? This is you stepped up the digs.
This is a 2-bedroom, 2-story cabin, 1.3 miles from the site of my property where I'm building Casa de Jerry Más allá de la luna. And it's just a beautiful wooden, beautiful big 2-story cabin. I'm by myself. My son and my dad are still in Barrio Los Angeles with the dogs and the cars and the.
You left them in the hovel and you're living the high life.
Kinda.
Well, I like it. I think it's pimp. This is an interesting question. And it is, how's the token swap going to affect the new net airdrop? I don't know. I'm not sure. But again, they can accomplish all this with a series of snapshots. So Patrick says, send him some coordinates.
Well, isn't the next new net registration thing, Nick, on April 20th?
Yep.
That is an interesting token. But I'll tell
you, UNET's going to be great. It's just
really interesting. But I'll tell you the one though that I think is absolutely just the one is the DAO, is the SingularityNET DAO. That whole Dynaset thing. I agree 100%. There's no way human beings will ever be able to outtrade properly put together AI.
Well, think about this, and I think this will be my final thought, and then I'll get your final thoughts. My final thought is to Irving J. Good said in 1965, the invention of artificial, I'm paraphrasing, but the invention of artificial intelligence will be the last invention humanity ever makes. Essentially, it's at least the last invention humanity would need to make, because once you have self-fixing, self-replicating AI agents, AGI agents that are smarter than humans, we're on the sidelines. Hopefully it's a benevolent, transition. Hopefully those are benevolent agents, right? That's the whole beauty of SingularityNET and that whole vertical. Singularity DAO, they're already outperforming humans. And they've been running 8 months, 9 months. They've only been actually testing. They've done 1 quarter with real money, and they weren't shorting. They were only going long and getting out of the market. And doing one side, they outperformed everyone. What do you think happens when they add in shorting in June? What do you think happens when people start seeing, I'm getting 20, 25% quarter on quarter over here with the robots managing money? Who on earth would give a dummy human their money to manage? I mean, you wouldn't, right? You wouldn't. And so that's it. In my opinion, that's it. So I'm very excited about what comes from that whole vertical of products, AGIX, Singularity DAO, NewNet, Rejuve, Hypercycle. When that comes, that's the side chain that will run Toda on Cardano. Anyway, that's kind of an amalgam thing that's just for SingularityNET to build out this agent network. You have True AGI, Sophia DAO, Mindplex. You have a lot of really cool AI verticals. And if you own AGIX, you just get the tokens, which is dope. So that's my final thoughts. I'm bullish AI and our iterative approach to AGI. What's your final thoughts, Jer?
Well, I'll tell you, it's kind of interesting. I got 2 things. One, for those, and I saw some comments about where this is, Google Maps, it's called Beyond Moon Farms. Just Google Beyond Moon Farms, Google Maps, boom, it'll take you right to the location. I just bought the whole mountain above the property that you'll see there. My thing, remember when I was telling you I reduced all my positions by 60%? The only one I didn't reduce was AGI. Yes. It's the only one I did not reduce. I still have every single one of those bad boys. And there's a reason behind that. I think we're going to see a tremendous amount of emergence. We're going to see a watershed of things emerging where code is doing what we used to have professionals do in many areas. And I think that is going to reduce corruption. I think it's going to reduce a lot of the bullshit that goes on. And I think that's just good for people, right? I just think that's really good for people.
Jerry, I agree with you 100%. Yeah. Okay, we got to do this more, Jerry. So now that you're living the high life and you have a quality microphone and you don't look like you're being held by Al Qaeda, we got to have you back on more and more. Now, are you still doing your show? Are you doing your show right now, or what's going on?
I haven't. I'll be honest. I've let my YouTube channel kind of go off. I've got my Patreon group that I'm very much involved in. It's become kind of like the yield-seeking group. I mean, we're all just, dude. It's disgusting the yield that I generate and convert into U.S. dollars and Bitcoin on a monthly basis. It's disgusting. Let's put it this way. What I used to live on for an entire month when we were doing this in the old place, I make in 6 hours.
Yeesh. Well, you know what? I hope you get super rich because I need a whole big giant list of people to mooch off of. I'm not above it.
Exactly.
I'm not above it.
Well, I owe a lot of the success in my strategy and the way that I think to tuning in and hooking up with people like you, understanding biases, understanding game theory, learning about money, right? What is money really? Most people don't have any idea what is really going on and, how it's created, how it's dealt with, So channels like yours, hugely important. Everybody, do your family and friends a favor, tune them in so they can get educated. We need to educate each other around finances so that we can do a better job taking care of each other.
Well said. I won't try to even usurp that. Stay in school, Jerry, as well as the rest of you. Don't do anything my poor insolvent drunk strung out on meth grandmother or Jerry or Eric or Brandon or Emil or Jeff wouldn't do. And on that note, we will see you on the next one.